Welcome back everyone to another market recap. Today is November 15th, 2024. If you want to get better at trading, really watch this video until the end and take good notes because this is going to be one of the easiest, best, and fastest ways for you to study. I'm doing all the work for you, finding all the trades. All you have to do is sit back, relax, and take some good notes. If there's anything that I say that you don't understand or don't know what I'm talking about, go watch one of my short form videos where I cover that concept or watch a video from someone else. With that, there is a lot of opportunities to learn from today, and we have a lot of trades to cover from all kinds of different people as well as myself. So let's get right into it. First, going into the day, you need to understand that we are getting very far extended, and if I actually measure out the standard deviations of this, I think this is really actually fascinating. See how this 2 to 2.5 marked that first retracement, and see this 4 to 4.5 marked this retracement? I think that's very interesting. And so then, same thing, I measure out standard deviations of this. You can see that 4 to 4.5 playing a role as well in this next retracement. So standard deviations are a very powerful tool. You measure out the manipulation, and that 2 to 2.5 will often be a good take profit, and that 4 to 4.5 will be a max extension level. It's kind of crazy that it works so well, but the reality is it does work, and so you should use it in your trading. Now with that, since we knew that that was that 4 to 4.5 extension, we knew today could have been possible to have a retracement of some sort as well. Going into the morning, let me go down to the lower time frame chart now. You will note that we had an SMT with London's highs. So this happened earlier in the morning. If you were aware and you had really done your due diligence on your higher time frame and saw that you had this SMT, you could have been very aware that we were possibly going to target something lower, right? We had all these lows that were wanting to get taken out, and you can see those all got ran. So anyway, the SMT was a little bit of a warning sign, and then also on here on the lower time frame, and I have the S&P pulled up on a different screen, so you can't really see the SMT right now, but trust me, it's there. And then right here with these highs, or it was these highs, yeah, it was these highs. You had with the data high, you had an SMT as well. So low time frame SMT, high time frame SMT, and yeah, the S&P swept London's highs, so the Nasdaq didn't really need to. Then going into the lower time frame chart, we're going to talk about possible trades you could have taken. So after you knew, this is why you want to check the S&P and the Nasdaq, because if the S&P took London's highs, the Nasdaq might not need to take London's highs, and if you're getting SMTs like this, you can get your bearish bias for the day. So we had this data low, and we had London lows going into the morning. Obviously, we had these as well, this data high, and we had London's highs. But if you had done the right due diligence, you could have seen these SMTs, could have seen that we swept out London's highs on the S&P and known that we were probably going to dump as well because of those standard deviations. And I'm sure a lot of other confluences as well could have told you that we were probably going to go lower today. So with that, you can see we came down for this data low and then to London lows. Now, the first trade of the day that I took was a breaker trade. We got a high, a low, a higher high, which swept this liquidity, and then a lower low. So let me show that on the chart. You can see that is right here. We got a high, a low, a higher high, which swept this liquidity, and then a lower low. So this is your breaker block. This overlaps with this fair value gap, and we had both the data high below and we also had London's highs below. Now it's kind of weird because on MNQ the chart looks a little different. We had already taken out the data low, so I don't know why they are even different. They should be the exact same, but regardless, you'd enter short here and stop loss above the breaker, targeting London's lows or targeting the data low. I took this trade on MNQ, so I targeted, I'm not exactly sure because I thought that the data low was right here, so I must have messed up with my trade, but you get the idea. Enter on that fair value gap, targeting data low and London's lows. But the only downside is we are pretty far in discount of this leg. So, and then the next trade. Oh, it's important to also note, this is something that you might find really interesting. Go watch my video on propulsion blocks if you don't know what a propulsion block is. But a propulsion block is when you have an order block, so a final move up, sweeping liquidity, and then you get another order block coming off of that order block. So you have this OB, you have this OB, and so that creates a propulsion block. And so when you push into a propulsion block, you oftentimes will get very violent and aggressive moves towards where you're trying to go. In this case, the market was ready to go lower, and we had a ton of liquidity below London's lows. And so when we push into this propulsion block, I should actually just title this propulsion block. So propulsion block here, when we push back into it, we get a very violent and aggressive move down that runs for quite a while. As well, let's say you measured out this. Let's see how that lines up. You see that 4 to 4.5 marked this low. So I can't make this up, guys. This stuff, it does work. I don't know how, but it does. So it's crazy. Use those standard deviations, so they're going to be a very powerful resource. Anyway, you can see we react off that propulsion block. And then as well, something else that's interesting to know is, I believe, where is it? Hang on. So, not that you were necessarily looking at the S&P, but you can see on the S&P we react off of this this time level, this 830, and these time levels are oftentimes very, very nice for support and resistance. Something else I was going to add for high time frame bias that I'm just now remembering is new week opening gap. I made a video on this today. And essentially, this is the gap between the opening and the closing price on a Friday to Monday. And so, pulling up the higher time frame chart, you can see this with the new week opening gap. These basically are a giant invisible barrier that the market has in place. And a lot of time when you run into this new week opening gap, you will get a reaction in the opposing direction. Sorry for all this stuff on the charts. Let me get rid of it just for a second. So when you hit this new week opening gap, a lot of the time you'll get a reaction off either the low, the midpoint, or the high, and then you go run the liquidity, the opposing liquidity. So I believe this has something to do with the 2024 mentorship, although I haven't watched that yet. But you can see every time we hit this new week opening gap, we then run sell side. We then run sell side. We run sell side. We run sell side. So the new week opening gaps are actually kind of OP. And yeah, see how many times we hit new week opening gap and then hit sell side? It's kind of crazy. And so anyway, we bump into it like 20 times. I don't know if it was actually 20, but you get the idea. And then we start dumping. So since we got a reaction off this new week opening gap, we could assume that price was probably going to want to distribute lower. As well, something else really quickly about the high time frame that I'm going to talk about is if I pull up the this is called the stat map, and so if you don't know what this is, I have a video on it, but it basically is just like the statistical expected distribution for any given manipulation and distribution for any candle, right? You can see this monthly distribution. We already had gone way past this monthly distribution, expected distribution. This is way further than your average monthly candle will distribute. So it was reasonable to expect some kind of reversal because we'd already hit this, like the expected typical distribution of a monthly candle. So that's something else to note. Going back to the lower time frame, we have a lot more trades to cover. Hopefully this one isn't too long, but we'll see. Next, another one from me really quickly is, and now I should not have been bullish, so I probably shouldn't have taken this trade in the first place, but I did end up taking this trade. And this trade also was a trade that FA took. So we're going to review it from FA's point of view since he also marked it out. Here we got this trade from FA. Basically, you can see that we had a sweep and then a 1 minute close above this old fair value gap here. So you can see that right here on the 1 minute chart. We had a sweep, but ideally you probably shouldn't have been bullish if you had done all the proper due diligence, but I took this anyways because I'm just trying stuff out right now. And so anyway, I don't know where my anyway, there it is. So entering here, stop loss, if we were to have a candle body close below this old fair value gap, but frame the stop loss like this with your hard stop loss at the low, and then simply target this high, and that was a 1.75 risk to reward trade. So I know that's kind of confusing. Go watch my video on stop losses from yesterday, and I think that's the way I'm going to do it starting from now on. Hard stop loss at the low. Stop loss is based off of if we close back below the old fair value gap, and then I frame the risk based off of this the candle that inverses it. So that's what I'm going to do. Then anyway, Jan, we have a trade from Jan, and he gets into the market, gets out. So basically we had a fair value gap right here. Pretty clearly, price respects this fair value gap. So internal liquidity to external liquidity, right? We respect this fair value gap, and then we go to external liquidity. So what was external liquidity? This low. So basically, delivering from a fair value gap, we get a 1 minute inverse right here. So on this 1 minute inverse, now I wanted to take this, but I had already taken a trade that wasn't as good, and I'm just, well, it was probably okay, but I'll show you that one in a second. On this close below, you target this low. It was a nice 1-to-1 trade. Yeah, he made $750 like of real money today. So this was very awesome. Very proud of him for all the hard work he's putting in. It's paying off. But yeah, he waited, found this one high probability trade, internal liquidity to external liquidity, and then took this trade. And that's all you need to do. That's really all you need to do. Okay, now I'm going to talk about the other trade that I took right before this. I tried this this breaker block trade. You can see this is a low, a high, a lower low, which sweeps this low, and then a higher high. So I marked out this as the breaker block. I marked out this as the fair value gap, and I tried to enter right here, targeting this high. Now here's the thing. We are so bearish. I understand we're in discount, and I understand that I wanted to see all this get ran, But on days like today when you're just dumping, it's not worth it. It's just not worth it. You got to really understand the daily profile and understand the context of your trade. I get that I wanted to take this long because it looked okay. This would be okay on a normal day, but this isn't a normal day. You can tell that today is just like on days where you just move in one direction and expand in one direction, these long setups aren't going to work out. And so that's something that I'm going to take into note for the future. When you have stuff like this on days like today, these are not going to work out. But anyway, you can see here that I tried to enter here. Long position, entered right here. And I very quickly got stopped out because this candle body closed below this old fair value gap here. And that was typically you have your stop loss here, but I stopped myself out early because we closed below this fair value gap. So, and I wasn't targeting that. I was just targeting these highs, but yeah, didn't work out. Then, let's see, I covered that short. Let's see. Then I had this trade, which probably didn't need to take, but I wanted to see if it would work. Basically, what time was this at? Okay, here it was. So, or was it right here? Hang on. Oh, we're gonna look at. Let's look at my friend's trade, F3's trade. I'm gonna really quickly pull this up here. You can see this trade from F3. Basically, he knew the bias was bearish. He caught an amazing short, and we're gonna watch a brief video really quickly on his trade. So here you can see him entering off of this breaker block as well. It was overlapping with key time. I don't use the 10 a.m. time, but apparently he does. He's marking off that we have bearish order flow, order block here, an order block here, a fair value gap here. And so anyway, you get the idea. He's catching this distribution to the downside based off the higher time frame idea that we're probably going to go lower here. So, how did this trade work? Well, let me pull up. Where is it? Let me try and find where he did this trade. It was right here. So, now I don't know if this was the breaker block he used, but this is the breaker block that I personally would use because I don't really know exactly what he did, but I would say since we had a high, a low, a higher high, which swept liquidity into, remember this fair value gap, this 2-minute fair value gap, right? So high, low, higher high, which sweeps liquidity into a fair value gap. Then a close below. You can see here you have a tiny fair value gap that overlaps with this breaker. So you would enter in this fair value gap. At least that's what I would do. And maybe you could have I think you have to have your stop loss up here. Let's see what he did. He I don't know where that trade went. Oh, here it is. Okay. Where did he have a stop loss? So yeah, I don't know. He entered off of something else. He entered off some other breaker. I'm not exactly sure what breaker, but this is the one that I see. This high, low, high, high, low, low. But then your stop loss is kind of wide. So anyway, this would have worked out very, very well. But you get the idea. He took a short off of some breaker within here. And yeah. Next, I'm going to talk about a trade that didn't work. That was kind of unfortunate. That both DX Trader and I took. It was this trade that looked really, really nice. But once again, you have to understand the daily profile of the day. In a daily expansion day to the downside like this, it's not going to be good to take these kinds of, even if they look good like this. Like, so we swept out this low, we had trendline liquidity, we inversed the upside, but the higher time frame is this bearish narrative that we're just dumping and dumping and dumping. So this inverse to the upside in this situation is not going to be as good of a trade as it otherwise would have been. So you can see this idea was right here. You can see we had trendline liquidity. You can see, like, I even measured out the standard deviations of this because I was like, oh, I was so confident this was gonna work. I was like, wow, the 2 to 2.5, you know what I mean? But no, because in a bearish day like this, you just gotta stay away from longs and know your bias. So that's why in the morning and every day from now on, I'm going to figure out my high time frame bias and allow that to like cut away half the trades that I would otherwise take. Like that way it eliminates half the bad trades that you would take, like this and that other breaker block trade to the upside that I took, where they're in the wrong direction of your bias. So that's what the high time frame analysis is gonna do for me. Anyway, you can see that this swept out this low, we inversed to the upside, and I thought for sure that we were gonna go run up to. Honestly, I thought we were gonna go run pretty high. Honestly, I thought this was like a pretty good inverse, but yeah, we then came back down and we closed back below here. So I stopped myself out right here, and yeah, once we closed back below here, that's where I stopped myself out. And then I was gonna have take profit 1 here, TP2 here, and TP3 here probably, but none of that worked out, so unfortunate, but I did like this trade. So let me know your thoughts on this one, why you think this one didn't work out, but I thought this was good. Then lastly, I think that's it. I think we covered everything. All right, yeah, I think we did cover everything. We covered Jan's trade, we covered FA's trade. That was a lot, but I hope you find these longer ones valuable because I cover so much, and at least I feel like I learned a lot after making these. So with that, I will see you guys in the next one. Bye.